The play was the 5-sim Renko. And here's what it was. This is one of our classic setups in the room. Now, the 5-sim Renkos are large time frame, or largest time frame that we use, I'm sorry. So we went over how to trade Fibonacci areas, meaning my fib zone, buy and sell zone. They work really well in the small time frame. You won't see a lot of them on the large time frame because it's too large a time frame. But what you do, how you use the large time frame, you always want to use it on trend days, hard trend days. I went over that yesterday and the day before. Is that we really want to use it on trend days. What does it mean by trend days? Use my large time frame. We have a built-in moving average system built into the JaySignal. We have a longer-term moving average and a shorter-term moving average. And what happens is we don't use moving average per se of support and resistance. I know the 50 moving average is great support and resistance after the 20 and 50 cross on the first retest. Other than that, moving averages to me are worthless. You can't depend on them for support and resistance. They blow through a lot of them. So we got to use them for trend direction only. And so we use a smaller moving average, which is the green built-in moving average on JaySignal, and the larger moving average is our magenta. And there's a characteristic I call a shark bite trade that happens a lot, meaning when the smaller moving average gets out of alignment with the larger moving average, because typically they'll run parallel, and they'll look like this. In hard trend days, they'll run parallel like this. That means you're in a hard downtrend. But what happens is the smaller moving average will get out of alignment like this. When you see it get out of alignment, you're looking for a retracement back up and looking for a continuation back down. It happens all the time like this on a weekly basis on hard trend days. You'll come up, and then you'll look for a continuation move down. It's one of the best trade setups you can get. It happened on gold also. If you look at gold, look at the alignment, how it got out of alignment on gold also around 6:45 to 7 o'clock. You had the first retracement that you tanked with JaySignal also. So this spread between the MAs really lets you know that the larger time frame is the best way to take continuation trades. It's really when you want to focus on the 5-sim Renko. Yeah, are you rolling here, Gerald? Hold on one sec. He's asking me if we're videoing. We should be videoing. Yes, no? Okay. All right, sounds good, man. All right, so I want to make sure we're going to record this video for you guys and gals. But one of the best setups you're going to get, guys and gals, when you get below low value area, just a typical setup in the market, you get below low value on your own charts on the 5-sim with trend. And this means, you know, moving average has been down since around 4 o'clock this morning, 4:20 this morning. This is major weakness. Major weakness. So what you want to do is you want to take the first retracement short that you see. Now, if you see your 5-sim Renko in a hard trend day, it's going to be your top time frame to trade off of on trend days. And I emailed multiple members, new members about this. They said, well, how do you distinguish taking a 5-sim versus a 3-sim? If the market's flat or choppy, the 5-sim is very conducive, or 3-sim is very conducive to what I like to do. I called the perfect short yesterday. I said if we broke 24, we retest 24 on the 3-sim, we're going to have a great opportunity to take the market short. And to show the differences, we broke LVA yesterday, 24, retested 24. It actually got the JaySignal exactly on it, and she tanked. We gave you about a 30 to 45 minute heads up on that trade, and it was just beautiful, gorgeous. Well, it wasn't a hard trend day. We were in a chop day, right? Well, today, the moving average yesterday were relatively flat or sideways. Today, it's a different story. You log in today, and we are hard trending down. Look at the spread between the moving averages. This is where you really back the kitty bank up and really add the tick total to your profit and loss statement on a weekly basis. Because when you get hard trend days and these moving averages get out of alignment, you want to concentrate on the 5-sim Renko. If you're in a symmetrical wedge where the moving averages are flat, the 3-sim is very conducive to your trading plan because you're going to catch all those Fibonacci retracements. All right, and additionally, you're going to get that break of LVA, retest of LVA, and it's going to give you that shallow retracement like yesterday. So play yesterday's video that we did. Go to daytradingthefutures.com. That shows you how I trade the 3-sim Renko on that call I made. If you recall yesterday, I'm going to show you the difference on a shallow retracement and a deep retracement. I mean a shallow retracement on the 3-sim versus a 5-sim. So I put these guys, get this out of the way a little bit so you can see where price action is. You put these guys beside each other, right? Here's my call yesterday. I said supports at 34. Now here's all the fib retracements it did. 1 retracement, 2 retracement, 3 retracement. All my fib zone, 4 retracements, had good 4 retracements in my fib zone. And I said we got 24 support right here. I said if we break 24, I want to look for the first JaySignal short, an ABC short or 1, 2, 3 pattern short. I was exactly correct. Right here, it gave us exact Fibonacci short. This is the difference between a 3 and a 5 sim if you look at it. Now watch. This is going to really hit home with you. Look how my 3 sim in a relatively flat, this is a choppy flat market, right? We're in a flat market. Look how flat and choppy we were yesterday. And I said if we get outside of the value areas, so here was LVA at 24, 48.24, and HVA was at 48.76. I said if we break 48.76, we'll look for an ABC long or 1, 2, 3 long. Or if we break 24, we'll look for an ABC short. Sure enough, we broke 24, retested 24 exactly. I got the JaySignal short on the 3 sim. My 5 sim Renko will not give me a signal on this short, on this retracement right here in chop days. Because look at the retracement. The retracement is very shallow. So if I'm coming into a symmetrical wedge and I'm choppy, I'm betting on the 3 sim breaking outside a value area, and I'm retesting and I'm going short. And that's the biggest difference between a 5 and 3 sim. Whereas today, right, and that's how we caught that big trade. I gave you about almost a 45-minute heads up on that trade. So if we break down, look for the first JaySignal short, nailed it to the exact bar, drilled it. It's a beautiful trade. $800 move, plus $800 plus move per 1 contract. Where if you look today on the 5 sim Renko, I only trade off a 5 and a 3. Where at the 5 sim Renko, you got big giant moving average spread. So you're on trend days. I don't want to focus on shallow retracements on trend days. I want to focus on my larger time frame on trend days. And so when I'm trading the 5 sim Renko versus the 3, if I'm in a hard trend down, I want to really concentrate on my 5 sim Renko because it's going to produce really big pullbacks. I've only had 1 Fibonacci short this morning on my 5 sim Renko right here. It's 1 for 1, and it caught that big giant move down. Good job, Mike, for catching that this morning. Great trade, man. Really good way to do it. So that's another big giant move right there, $800 plus move also. This is an $800 plus move. The difference is that this is a symmetrical wedge it formed, or we were in a chop market yesterday, and I said we need to get out of value area, low value or high value, before it gets speed. And I said the market's going to get violent once we break that level. Sure enough, it breaks the level, it retests LVA, and we got violent. Because I can't depend on the 5 sim Renko to give me a shallow retracement if I'm in a chop market. Does that make sense, guys and gals, now? How you differentiate a 5 and a 3? Are we on the same page now? Everybody on the same page? If you're in a hard trend day, really focus on your 5 sim Renko. If you're in a chop or flat market, which you'll get, or symmetrical wedge, you're not going to get a 5 sim entry. You're not going to get it because what I'm looking for is a break outside of value once it does break, and then a retest and a continuation. If you do that, you're going to be very, very successful with JaySignal because it works the same way in all markets. Okay? Don't lose the fact of trading a large 5 sim Renko. Don't lose the fact of trading this thing in trend days because that's your most important chart to look for. Because wherever it retraces and gives a fib dots, it's probably the reversal. Now the next trade I'm going to look for then is I'm going to take this swing high, wait till the swing low sets in at 62% retracement. It's right around 50. 50 is my LVA. My hedge fund's just above that. That's my next retracement short on the next setup. Okay? Where you're going to look for a nice little sell combination right in that level. But just remember, the difference is this. I trade 3 sim. 3 sim, if you're going to trade my fib zones of 62 to 76% after a trend change on JaySignal, it's the best way to do it on the 3 sim. You're not going to get a lot on the 5 sim because it's a large time frame. 3 sim's the best way to do it. We had a fib zone here, fib zone there yesterday. And then once you get, if you're in a chop market, you can trade those fib zones with JaySignals on the first retracement, like I went over yesterday with you. But once you get out of these value areas, here was LVA. Once you get outside of it, okay, out of a chop markets can be one of the most profitable markets you can trade. Once you get outside of LVA and you retest, you get a JaySignal. That is the most violent that the market could be because there's no support. Okay? It's a really great way to do it. All right, so that's the difference between a 5 and a 3 sim. Both great ways to trade it. We nailed it yesterday on a smaller time frame. Called that out way ahead of time for you. And now we nailed the large time frame. Now my trade this morning that I'm giving you a heads up on is now a deep retracement back into this retracement level. So the market can only do one of two things. We're going to trace for a 62% retracement, 62 to 76% for another continuation. Probably set up another 5 Simrenko trade. So watch for the fib dots to fire up in these levels. Okay, it is the 50%, I'm sorry, is right here at the other LVA. So it could fire actually right here. The other LVA is right here. So watch that level. Whichever level it gets to, and you get a pull-in bar. This is going to be our next sell level. This sell zone or the next LVA. All right, for the next 5 Simrenko. So that's our next setup. Our setup yesterday was break LVA, retest LVA. I said we break 24, retest 24. I nailed it to almost an exact tick. Broke 24, retest 24, tanked, right? $800 plus trade per one contract. Today, the next setup would be a continuation trade, and I'm looking for in the large time frame because why? My moving averages are what? They're big. Really big spread to the downside. All right, Gerald, go and check that off. That's how you trade a 5 versus a 3. And that's what we're looking for in the next trade.